Welcome back to Nomad Investing. Today we are looking at a stock that has been a massive winner for years, but recently has dropped more than 50%. Is this a rare buying opportunity or a warning sign of more trouble ahead? Let's dive into Novo Nordisk. Overview. Novo Nordisk is a Danish multinational healthcare company and one of the global leaders in diabetes and obesity treatments. The company generates the majority of its revenue from diabetes care, which makes up roughly 80% of the total sales. Within that segment, insulin products remain essential, but the real growth driver has been GLP-1 therapies, like Ozempic, Rybelsus, and Wegovy. GLP-1 is a natural hormone released after eating that helps regulate blood sugar and appetite. These drugs account for rapidly increasing share of the sales, as demand for weight loss and diabetes management drugs keeps rising. Outside of diabetes and obesity, Novo also has smaller but important business lines in rare blood disorders, hemophilia treatments, and hormone replacement therapies. These areas are not large, but they provide diversification and long-term growth opportunities. This product mix shows that while Novo has a dominant position in diabetes, it is also building leadership in the obesity treatment market, a sector with massive global demand and still very early in the growth phase. Financials. Forward EPS is about $3.9, and both forward and trailing PE ratios are around 15. The company pays a semi-annual dividend of roughly $1.7 per share, giving a yield close to 3%, with a payout ratio of roughly 50% and a dividend growth streak of 6 years. Novo's market cap is currently near $250 billion. Looking at the top line, revenue and revenues per share have been rising steadily for the past 5 years. And even the last few quarters have shown solid growth. Earnings tell the same story. EPS has climbed from about $1.5 in 2020 to nearly $4 today. Margins are another strong point. Operating margins are just above 40% and profit margins are north of 30%. Returns are outstanding. Return on invested capital is around 50%, and return on equity is incredible 80%. On paper, the fundamentals look excellent. So why has the stock dropped so sharply in the past year? Let's take a closer look at the risks and opportunities. Future. Novo's future depends heavily on its ability to keep dominating the diabetes care while also capturing the fast-growing obesity treatment market. Let's break down the key opportunities and risks. Opportunities. Global demand for diabetes and obesity drugs. Around 500 million people worldwide live with diabetes and obesity rates continue to climb. This creates long-term demand for Novo's treatments, particularly GLP-1 drugs like Ozempic and Wegovy, which have become blockbuster products. Obesity market growth. Obesity drugs are still in the early stages of adoption, but analysts estimate that the market could be worth hundreds of billions of dollars over the next decade. Novo is well positioned as one of the leaders here. New product pipeline. Beyond Ozempic and Wegovy, the company is investing heavily in the next generation of GLP-1s and other therapies which could extend its competitive edge. Global expansion. Novo is expanding into emerging markets, where diabetes cases are rising fast. This could be a key growth driver over the next decade. Risks. Patent expirations. Like all pharma companies, Novo faces the risk of patents expiring on its most profitable drugs, which could open the door for generic competition. Regulatory pressure. Governments and regulators around the world are increasingly scrutinizing drug pricing. This could impact margins if Novo is forced to lower prices on key treatments. R&D dependency. Continued success depends on developing new blockbuster drugs. If the pipeline fails to deliver, growth could stall quickly. And lastly, why the stock has dropped so much. It can be summarized roughly to competition. Novo's stock has dropped a lot for a few reasons. First, the sale of its obesity drugs like Wegovy grew slower than expected, partly because of the company couldn't make enough to meet the demand. At the same time, the competition from Eli Lilly has gotten stronger. Their drugs, Mounjaro and its weight loss version Zepbound, are showing really good results, and some studies suggest that they may even work better than Novo's treatments. That's made investors worry about Novo losing market share. Another problem is the rise of compounded or copycat versions of Wegovy and Ozempic. These cheaper alternatives, especially in the US, have taken some of the sales that would otherwise go to Novo. On top of all that, the company cut its full-year sales forecast, which worried investors and led to analyst downgrades. Put together, these factors explain why the stock has fallen so much from its highs. So while Novo has a massive growth potential, especially in the obesity care, investors need to keep in mind the competitive and regulatory risks that could impact the story. Still, if I ask people to name an obesity drug, I would bet $100 that they say Ozempic. Now let's move on to the intrinsic value. Forward EPS is around $3.86. Analysts are expecting strong growth for this year, but after that estimates drop down to only about 5 to 10% annually. While competition in the obesity drugs will definitely be tough, I think Novo's diabetes business should hold up reasonably well. Obesity treatments currently make up about 25% of the revenues, and I don't see this being a winner-takes-it-all market. The overall obesity market is still expanding, so there's room for more than one major player. With that in mind, I'm using a growth assumption of 6% for the next 5 years, and after that 4%. And as always, I want at least 12% annual returns for my money. Looking at the valuation, Novo's PE ratio is near historic lows. While the median PE ratio has been around 25, I believe Novo deserves a premium multiple because of its track record. But I also want to stay conservative, so I'm using a PE ratio of 18 for the next decade. Putting these numbers together, I get an intrinsic value of around $65 per share. That's above the current stock price, which suggests Novo is undervalued even with these cautious growth assumptions. And of course, there's always a chance that the company surprises us with much faster growth than expected. If Novo can maintain its pipeline success and keep competition at bay, this downturn might be a buying opportunity for the long-term investors. On paper and in my mind, Novo is a buy. But personally, I feel like I don't know enough about the science behind these drugs to risk my money on a possible turnaround. Usually I just avoid drug and healthcare companies, banks and insurance companies. And remember, this is not financial advice and do your own research. Well, what do you think? Do you think Novo is a buy at these levels, or is the decline just beginning? Let me know in the comments and hit the like and subscribe. And as always, do not lose money and safe travels. Bye bye.